Morning, my name is Nuswantoro from Universitas Dian Nuswantoro, Indonesia. So today I will present my article for the first international conference on business, economics, accounting, and technology 2025. So yeah, my article title is Analysis of Fundamental Factors that Affect the Stock Performance of Many Companies Based on the Indonesia Stock Exchange. So here is the title and wording for my article. So the capital market is serve as a platform where demand and supply of long-term financial instruments meet. The existence of the Indonesia capital market has become a big concern lately. Based on the increasing public awareness, the mining sector holds a vital position in the global economy by supplying essential raw materials, including coal, gold, nickel, copper, and various other minerals. As a capital-intensive and cyclical industry, the financial performance of mining firms is heavily influenced by commodity price volatility, operational efficiency, regulatory frameworks, and shift in global demands. Within this context, fundamental analysis serves as an important approach for investor and financial analysis to evaluate the intrinsic value and financial stability of mining companies. This study has explored that fundamental factors such as P/E ratio, debt-to-equity ratio, and return on equity discovered to affect stock returns. Therefore, the purpose of this study fundamental factor analysis is to ascertain whether the company's stock performance is impacted by basic factors pertaining to its financial and business success. And then, so what is the objective and methods for my article? So the study aims to examine the fundamental analysis that affects the stock returns of mining companies that list on Indonesia Stock Exchange. The study examines three main variables as the independent variable. It is current ratio, debt-to-equity ratio, and return on equity. And stock returns will be the dependent variable. Employing a quantitative approach then conducted using FUS 12, the study relies on secondary data obtained from the 2021 until 2023 annual reports available on the official website of the IDX. Consists data from 63 mining companies and 144 data have been selected to fulfill the criteria. And then here are the results and discussion. So the results show the results of the study show that all of the variables have an effect on stock returns. It is shown by the result of probability at the table above. All of the variables have value less than 0.05. As x1, as the current ratio shows probability 0.002, it is less than 0.05, and then x2 is tip to equity ratio show 0.03, and then x3 as the return on equity shows probability value is 0.0024. So x1 and return on equity positive significant effect on stock returns, while debt to equity ratio negative significant effect on stock returns. So the implication of the result. The results indicate that current ratio and return on equity positive significant effect on stock returns, while debt to equity ratio negative significant effect on stock returns. The negative connection between debt and stock returns indicates that excessive leverage is perceived as diminishing. So the results indicate that while debt to equity ratio negative, so